Joining us exclusively is Evercore ISI's chairman, Ed Hyman. He heads the research team, has been the top-rated forecaster over the last 4 decades. What a distinction. Nice to have you here, Ed.
Sarah, nice to see you this morning. What a week.
What a week. Lot to get to with you on trade and everything else. But let's start with the banks, all moving lower on the back of what were some very good earnings. Cramer's been all over it, wondering why, saying it's the wrong reaction. What does that say to you?
Well, it's a big day today because of the banks. And I was looking to see if they could have just a clean sweep where everything was good and the bank stocks would rally. And they didn't deliver that. And so I'm positive on the economy. I think what's missing right now is to have the bond yield go up some, get the yield curve to steepen a little bit. But that's not happening either, in part because bond yields in Germany this morning are 27 basis points. You know, we're 282. They're 27.
Yes. And so does that make sense to you that the bank should be down? I mean, do you think it's something within the results or just the yield curve, which is not steepening?
I think that the results weren't stellar. They were good, but they weren't stellar. And the yield curve is a worry for people. And then trade is also a worry. But I think it's okay. I just have to be patient a little bit. Jamie Dimon's comments I agree with completely in terms of the way the economy's doing.
Ed, you said that the yield curve is a worry, but should it be a worry, I guess is the question. But based on the fact that you mentioned the German 10-year yield kind of anchoring the U.S. 10-year yield, I think you're suggesting that the narrowness of the curve is not really sending much of an economic message right now, or no?
I worry about it. I'm a big fan of the yield curve, but it needs to go negative before I react to it. And if it goes negative, you know, there are different measures like the 2-year versus the 10-year or the Fed funds versus the 10-year. And so I'll look at all of them and the context in which it would invert. But I don't expect it to invert. I think bond yields will go up at some point before the Fed funds get to, say, 3%. But if it inverts, I'll forecast a recession.
What about earnings overall, Ed? Which pockets of the market would you like to be in as we expect another pretty solid growth as far as top and bottom line results?
Well, I agree with that, Sarah. I think that the earnings this quarter are going to be a complete blowout on the upside. I think they'll be better than they were in the first quarter. The economy's better now than it was in the first quarter. And the dollar's still down, not as much as it was in the first quarter. Energy prices are still up. So I think earnings will be very good. I don't have a particular sector that I'm focused on, but I think overall they'll be up in the neighborhood of 25%.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.